Hey everybody, good morning. It's like Monday on a Tuesday. I don't know if anybody else feels that way, but that's everything is going sideways this morning. Everything going sideways. Sorry, I got started a little late here trying to got had people coming in the office, had just one thing after another, and everybody assumed certain things about what was going on, and I was just love it when people assume. And cool, my thing for today is not showing up. Awesome. Let's see. Where? Ah, darn it. So, anyway, we got Rob, Donald, Finborn, and Dan, Don, Steven, Sergio, Terry, Gary, Rob, Craig, Hugh, Mark, B, Ivan, Mad, Kimberly, my favorite subscriber, Diane, Arturo, Will, Cliff, JB, Mary, Ted, Scott, Gaten, Ed, Rongamer, Skaggs. Good to see everybody. Looks like we got lots of channel subscribers too, like Jenna Rush. Good to see you, sir. Piet, Robert, Giovanni, Carlene, Kay, Diana, Cohen. I don't believe I recognize your name. Welcome to the stream, Jason, Edward, Larry. Good to see everybody. Market's pulling back today. Anybody sufficiently freaked out? We got a large list. Large list. A little bit crazy. And trying to get my thing to pop up here. So I can, I did a monologue based on what we did in August. Looking back, I think the market's excuse that we're going to pay back tariffs, complete bullshit. But I don't know. We'll see. I don't see that happening. But there's too many. It's almost like too many players to be able to reverse all that. So I don't see it going to happen. But hey, whatever. So the YouTube monologue for today, maybe we're all future Warren Buffetts, maybe not. Current, maybe you're current Robinhood warrior, maybe you're not. But welcome back to another episode of The Markets Make No Sense, but we're here anyway. It's kind of like, whose line is it anyway, right? Like the numbers don't matter. It's all made up. Today we're diving into August performance, a month that perfectly encapsulated why investing feels like playing chess with a pigeon that keeps moving the pieces and then claims victory. It's kind of like that movie Big Daddy, different cards every time. He always wins. What's the name of this game? I win. So picture this. August 1st, everybody's holding their breath about the tariff deadlines, kind of like it's New Year's Eve, except instead of popping champagne, we're popping anxiety pills. I mean, anybody remember back in August? The market gods decided to throw a curveball right out of the gate with some truly spectacular jobs numbers. And by spectacular, I mean spectacularly awful, because we fired the BLS head, or at least Trump did. And we're talking about job growth so weak that even your unemployed cousin, who's been finding himself for 3 years, started looking good in comparison. Now, the July jobs report came in with revisions so brutal that they made the original numbers look like they were created by an optimistic grandmother. Oh, goodness. We're talking about downward revisions of 250,000 jobs, basically, for May and June combined, the biggest monthly massive massacre of jobs since the pandemic. May growth, a whopping 19,000. June, an earth-shattering 14,000. At this rate, we're going to be in negative job growth like it's a new cryptocurrency here soon. But here's where things get deliciously absurd. This is why I love this game, everybody. The S&P had its worst day of the month, dropping a paltry 1.6%, and treasury yields plummeted faster than your portfolio during the Reddit meme stock crash. Everybody panicked about that for like 48 hours, and then something magical happened. Dun, 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 dun. Bad news became good news. And again, it was like watching the same movie for the 100th time. But how somehow we all get surprised by the plot twist. The economy looks like it held together with duct tape and prayers right now. And the Federal Reserve starts making those sweet, dovish noises. Maybe we're going to cut rates. Jerome Powell showed up at Jackson Hole, which, by the way, sounds like a place where cowboys go to give financial advice. Basically said, hey, the job market doesn't look so hot. We're a little bit worried. And rate cuts might be coming, baby. That's the translation. So just like that, the doom and gloom went to the moon. And now let's talk about the winners and losers, because that's where the real opportunity hides, like Easter eggs in the market. The winners. First up, gold. Oh, beautiful, shiny gold. Don't trust anything digital. Gold. Keep it in your pocket. Keep it in your safe. It was up 4.8% in August to, a high of right around $3,500 an ounce, while everybody else was freaking out. I guess $34.50 basically. Now, I don't know. If you weren't already holding gold, I mean, congratulations, learning expensive lesson about missing out. But it's not going anywhere. It's not really run anywhere big picture. So Japanese stocks, we saw the Nike breakouts, like it was doing parkour, went up and came right back down. Now, while everybody's worried about global trade wars, Japan quietly having a party as they broke out. Back testing, though, sometimes the best opportunity hiding in plain sight. We cover that every day. And speaking of shiny objects, the treasuries had a decent month, up about 1% total returns. The 2-year dropped 34 basis points, the biggest monthly decline since August 2024. And if you were smart enough to buy some bonds when everybody else was chasing meme stocks, you probably slept a little better, like a baby with a trust fund. Now, let's pour one out for our fallen soldiers of the market. Bitcoin, after 4 consecutive months of gains, decided to take a 6.3% nosedive down to 109,000. And we actually dipped even lower over the weekend, down to 107. Crypto bros everywhere, very quiet on Twitter. Probably too busy trying to explain why they can't afford dinner this week to their significant other. The US dollar got absolutely demolished, falling against every G10 currency out there, down 2.2% for the month. Like the dollar showed up to a knife fight with a pool noodle. And when rate cuts are coming, nobody wants to hold the currency that's about to get demolished. That's kind of the basic. That's why. But the real tragedy in August, French assets. Oh, France, the land of wine, cheese, and apparently political instability that makes investors run faster than tourists from a Parisian pickpocket. The CAC fell 40, which is 0.9%. Or the CAC 40 fell 0.9%, excuse me, while everybody else was partying. Why? Because their prime minister decided to call a confidence vote, which in political terms is like asking your spouse if they think you've gained weight. Nothing good's going to come from this question. Here's what savvy investors should be thinking about moving forward. When markets are schizophrenic, opportunities multiply like rabbits in the springtime. Gold's rally isn't just about pretty jewelry or central banks. It's about inflation fears and currency debasement. If you think central banks are going to keep printing money, like monopoly cash, precious metals might offset that in your portfolio. Silver might be the better opportunity. Now, the Treasury rally tells us that smart money is positioning for rate cuts. If you believe the Fed is going to cut rates aggressively, long duration bonds could be your best friend. Just remember, when rates fall, bond prices rise. It's like financial physics. At least it works until it doesn't. And here's the contrarian play. Keep an eye out for French assets when everybody's running for the exits. It's often when you can pick up deals, similar to the housing we talked about a week or so ago. Political uncertainty is opportunity for those brave enough to try to pick up the pieces. Just make sure you're wearing gloves for your portfolio. That falling knife can cut pretty deep. The dollar's weakness opens up international opportunities. Emerging markets, European stocks, commodities all become attractive when the greenback is having an identity crisis. August has taught us once again the markets are less logical and more about psychology. They're always psychology. Bad economic news leads to good market performance because investors bet on easier monetary policy. It's like being rewarded for a test because the teacher feels sorry for you. Anyway, the key takeaway, in a world where bad news is good news, the real skill isn't predicting what's going to happen next. It's understanding how the markets react to what happens. So if you get yourself positioned for the Fed's next move, diversify across assets that benefit from different scenarios. And remember, in this game, the house always wins, unless you can possibly be the house. Keep your eyes open, keep your portfolio diversified, and we'll talk about how we can actually potentially make money today. So jumping over, looking at, well, I guess before we get there, let's do the disclaimer. All trading involves a substantial risk of loss and past performance. Just because I predict things, we make trades, we get it right, not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. And if you desire personal financial advice, hire and consult a financial advisor. Speaking about that August performance, check this out. Reload, refresh, renew. Look at the last month. Man, my number is down a little bit. Didn't book a ton of profit, but $1,000 for August in the kitty. 100% win rates. Average trade $143, and average percent gain 85%. Not bad. Got good, bad, or ugly. I got money tied up into actual stock positions. Been selling calls and stuff against them, but it's generating a little bit less money. Now, for those of you new, the goal is to build this number. This is a long-term challenge, building this number into 50K a month. When I click this one month button, I want this number to be 50K right there. Right now, I got a ways to go. We look back at the 3-month performance. Yeah, doing a little better. That's an average, a little over 6K a month. And we look at the year-to-date performance, not far off of 25K. And remember, we started this challenge back here in April. So before that, nothing. So this has all occurred, all that gain occurred since April. You can follow along with the closed trades here on K-Info. They're all verified. Verified trades right there as I close them. So overall, not too shabby. All time, I had this old account with some loss. I played with this account back before COVID into the meme stock stuff and COVID, and I kind of left this account with a negative $500. I basically put like $500 in it, played with Robinhood, decided I didn't like it, and left it for dead. And I even got, if you look at, for those of you that get to see the positions I have, some of the stuff I've got in there, it's like, why do you got that? It's like free stocks that Robinhood gave me when I opened the account. Still got those in there and still riding them. Some of it's complete garbage. So anyway, that's that. Making money. How many gurus out there have you ever seen show you their verified trading performance right here? Made $1,000 in August in this account. I've got like 20 something accounts that I trade, but this one right there, $1,000. Still making money. Got money. And these stars right here. It's I guess we have to go to the library. Profitable the last month for the first star. Second star means you're profitable for the last 3 months, and the third star means you're profitable for the last year. So I am not yet on the 1 year or all-time leaderboard. I am on the 3-month leaderboard. My profit way on down, but my average and my winning trades, I'm right down here somewhere, like 92%, I think. There I am, number 30, 92%. Not too shabby. We look at average dollar gain. I pop up here to number 6. Average percent gain, I guess it is. Not bad. And there's thousands of traders on here, and I pop up to number 6 for the last 3 months. Can't wait till I'm on the 1 year. I've got like a couple trades left to go. I got 97 trades. I need 100 to be ranked. So after this week, we'll get it. I got several things that are going to expire this week. So we got a big gap down in the S&P. Moving on. And Darren, good to see you. Gap down, but we're not breaking lower. Although somebody drew a big target right here. If we push on, we're right at the limit here. If we push on down, coming down here, and then if we get below that, it's coming on down here. If we get below that, it's coming on down here. If we get below that, I mean, same stuff I outlined for the last couple weeks, right? All the same support zones. Nothing's changed. We're probably going to pull back. Right now, we're just ping-ponging. We came up, made an attempt at getting to the 1272 targets. And we got to go retest again. Been down here once. This will be the second trip. If we can hold the higher low, still has probability we're going up here. Still, that's the long and the short of it. Looking at the ES overnight, things didn't really develop till this morning. That's where the big down kind of started. And we just removed some of these smaller time frame things off of here. We didn't really bounce. We haven't really done anything. So yeah, we did come down to that target. And we've developed something bigger. So looking at this from the high, right? Need the tool from the high right there to the low right there to the high right here. Ooh, this is a little bit concerning. So what we're looking at, rewinding. Yeah, this is one of those back to the bigger stuff I talk about all the time. These technical patterns. The first move down and the second move down. First move down, second move down. If we're corrective and we're going to go higher and get continuation, typically we stop in this zone. Right there. If we're going to get continuation lower, like this is the first 2-3 moves of something that goes further down, a lot of times we'll get that level. Now we came down almost to it, but didn't touch it. That creates ambiguity, uncertainty, question mark. Do we get continuation lower, or did we just get a little over enthusiastic and exceed this level and then we're going to bounce? Not sure. Yeah, even if we did tag this level, we could still have just gotten a little over enthusiastic and still reverse. But the big differentiator on a measured bounce between an ABC and a 1, 2, 3 is typically an ABC is going to stop here. This is an absolutely beautiful correction. We typically stop in here. If this is more of a impulsive 1, 2, 3, we get a 4, and then we're going to get a 5th wave down. We typically visit this level. Typically. Now, everything can be flexible and change. So right now, I'm cautious. All right, this kind of technically has a 1, 2, 3, 4, and a 5 in it. Could be done. That impulsive C could be done. That didn't really look impulsive. That definitely looked corrective. And this all kind of looks ABC-ish, but the market can prove it wants to do anything. So just look at that overnight action that we had from Thursday through this morning. The market was open yesterday, at least the futures were. If you didn't know that, they opened on Sunday evening. Right there. Sunday evening. And we traded all this through 1 o'clock yesterday afternoon Eastern time. Right there. And then we reopened, and it's been pretty much down since. So this price action was Sunday into Monday. Market closed, and then we reopened last night. We've done this from there. So it's been pretty negative this morning. Or I guess overnight into this morning. Now, if you're new here, you may be like, well, why are you looking at that and not just the cash index? So the cash index, no matter what time frame I look at, doesn't show me any of that price action. The market closed here on Friday, and we just reopened here today. There's a big gap of missing information, and we don't know what happened. That's why I look at the futures right there. So, in Q, take a look over here. A little bit different situation cooking. A little bit different situation. We did break down below the warning level. This did go lower low. We've got the high. This is different here because that goes back to when early in the month in August. Nasdaq's been in a big correction since. You know, we are likely to push this on down in here on Nasdaq for an absolutely beautiful correction. Now, anything lower than this low right here technically satisfies this. Any move lower than that, you know, low from back here around the 20th, anything can satisfy this correction and finish it up. Which it looks like maybe, just maybe. Let's go see if we actually did spike lower. We've got the low hanging out at, dang, I can't read that. Get on the right candle. 23.57. And this morning, or just a minute ago, we made 23.55, 54. Now 23.25. There we go. Get on the right candle. 23.25. So yeah, technically, this just satisfied the minimum required to be complete. Typically, we see it hit this. So we've got a downside zone, if you will, from where and these are delayed by 10 minutes. So I don't pay for up to the moment data. So this zone might be where we dip before we can rip. This has been a big correction on Nasdaq that's taken place since the 13th through today. Whereas S&P 500 went higher to a higher high, and we're on a new kind of correction here. So possibly it's the same correction over here, and we need a little dip. You know, even though we exceeded the start point, which was right back here with Nasdaq, that is a big 1, 2, 3 up. Could come down, make a lower low right around 63, 65. Like, how do we know what the market's about to do? This is how you do it. All right. Pop around, look at the indexes, look at the overnight action, look at what's going on. Compare and contrast. These two usually fly formation. They're usually wingmen. I mean, they're usually, you know, flying together. We're cruising along. One gets ahead, one gets behind, but they're usually both going the same way, same direction. When they've got opposite patterns, like this one's breaking out new highs, this one's making a lower high, that's a cautionary point. If this dips down back below here, it brings them back into alignment, and they can both go cruising higher again. All right, that's why I watch these. Russell, on the other hand, different drum, different beat, different dance. These are small caps. Look at that thing get obliterated. Back testing that break higher. Standard, normal price action type stuff right here. So we're back testing the break. Look at that. This was from all the way back in January. Topped out here, took a big down, came back up. Boom, we hit right there. Early August. Broke through. They're about a week ago. Coming back to test it. If this holds, it's like confirmation that we're going on out. Probably cruising up here, 2,600 would be the target for me. Right there. You may be like, what the devil's Russell? I've never even heard of this. I don't know how to trade it. Easy peasy, lemon squeezy, IWM. That's how you trade it. So we're looking at the same chart. This is just IWM is like SPY for S&P 500 or QQQ for NASDAQ. And the move up that we're looking for right here would be right up here at 257 level. If we can hold that break above that, I call it a breakout because that's the consolidation we're breaking out above. We hold it, likely to come up here. It might be resistance at this high. It might pop up there, bounce temporarily before we come on up. Normal, natural price action, but that's what we got cooking. All right. That's what we got cooking. Hey, good looking. That's what we got cooking. The list of negatives was big today. Yesterday I did a crypto special. If you didn't, if you're kind of rusty on crypto or maybe not so savvy in crypto, maybe go check that out. Look at that. Looky, looky, looky. Oil spiked up, back tested that zone and rejecting down, back down. I like it. We start back below, get back below 63 here in the next day or three. Probably indicating we're going on down to the 50s. Has a pattern for potentially going lower. Big drop, retrace, push down, retrace, next move down, push down, push down. So looking for this to potentially make it all the way down 250. That would be the most ideal, best target here. Right in there. People like, well, how can you play this? SCO, buy some shares. If oil's going down, this is probably going to pop. This is leveraged. Be careful on leverage. Has a substantial risk of loss. USO might be more your speed. You can buy puts. As this is probably going to go down. And then if you think I'm completely wrong, you just buy some UCO, which is ultra long oil. Buy some shares. And if you think I'm wrong, that's going higher. Gold, there you go, spiking out today. Economic uncertainty and turmoil. Still looking for this next move down. We hit the upside target. Retrace. Would be expected. We hit I mean, golly, that run on the head. Look how many green days in gold in a row there. Green day, green day, green day, green day, green day. Don't usually get that many green days in a row on gold. So watch out for the next pullback. That spike hit the target levels. I don't expect much more. And this is overlapping. So this is not impulsive and bullish. This is very overlapping and kind of corrective. Be very, very careful here. Funny enough, first move up, retrace. Second move up. We have room to potentially go on up to 3,620 right there. And still get a big turn down. This would be more of a running flat situation. First move down, retrace. Then first move up, retrace. Second move up. So first move down, second move down. And be careful. Doesn't have a very clean setup. Bitcoin turning the bottom after hitting the roadmap line. Look at this. I think it was Thursday. I mentioned we might have to hit the roadmap line. Friday too, I think. Came down there. Saturday we hit. Sunday kind of churn. Yesterday we hit. And now, can we get lift off? Looking for a break back above 113, 117. And if we do that, sets it up. Now, we've just got one little baby move up so far. Still in a downtrend of highs. Still could go lower. Got to break through that. And most ideally, back test it before we go higher. Ether has freaked me out yesterday when I got the I got all the alerts that we were pushing through that line in the sand level, the bottom of the box. I didn't panic. I didn't do anything because I was in the stock market, not with this position. Get a little green action today. I want to see this breakout back above 46.50. Get back up there. Quit messing around right here. That was the warning shot. Pushing down through 42.20. If we get through 4,200, probably going lower low down in here. And this could accelerate on down to like 3,500 if we get down here. So this is the warning zone right here. Warning level right around 4,200. If this starts down below 4,200, the long trade for the breakout higher to new big all-time highs, not going to happen right now. If we start pushing on down, more likely to go visit this daily roadmap line area. And this may, the rate this is coming up, we may meet it right up here around 35. Right there. So that's the warning signs right there. 4,200. We can stay above it. Going on up, potentially target up here 58 to 6,200 would be the ideal kind of target zone up here. If we don't hold it, then yeah, downside. Nike pushing back down below the breakout level from last summer. Highly likely to come revisit the box. That's the consolidation box we spent most of the winter consolidating in case you're new here. And that roadmap line may come back up. And these things may all come together. I use this as an indication of global liquidity, as I talked about in the monologue. If we can hold it and bounce, potential take this up to 50,000, and most risk on assets are going to ride along, including ES, NQ, Bitcoin, Ethereum. That's our main culprits to probably ride along if they were going to pop this higher. Dollar. Getting a nice bounce there. Still churning in here. We have the first move down, the retrace, and this next move down that we're just kind of sitting here consolidating. We haven't pushed it down to ideal targets. We haven't done anything that, just going sideways doesn't indicate anything. It's like the trend died right here. So we're not breaking out. We're not breaking down. We're just sitting, consolidating here. A spike down to this zone would clear it up and we could go higher. But this was only 3 waves up off the low. This is potential 3 waves down off of that high. Just lots of uncertainty here. I would expect this, me personally, I really kind of expect this to push down to a new low. Back down around 95.70, and then we can make a bottom and go higher. Right now, just unclear. Unclear on the dollar. Apple, not really doing much at all. Still in the same condition. Amazon still in the same condition. Not really doing anything today. Google still likely to push on out to 220. Meta breaking below the breakouts. Setting the stage to come back to here. Be cautious if you're long. We could, it's possible we're just coming a little deeper for the breakout test. Since those little spikes right there weren't there wasn't a lot of price action there. Maybe just coming back just a hair deeper, but getting below it is not my favorite. So if we're going to bounce, the upside right at the target right up there, 840-ish. Microsoft is down. Back to Big Daddy. So we've got the potential to hold this level. And if we get below that, come back to the breakouts. Right down here where the roadmap line is. Also, if you don't know the roadmap line, you don't have the roadmap line. It's just a set of EMAs. I have a video on the channel homepage. You can go watch it. Give you the code. If you want the easy button, links in the description. It's like a whole $5. Like, I don't know any guru that sells anything for $5, but I do. Especially a valuable thing. Like pretty much every service, everything I do is based off of this line right here. Bounces off that line, highly likely to work out in your favor on all time frames. There's some rules to it, and that's why if you go buy the $5 thing, you get the training and all that stuff. So that potential, if we get below that 165 area, we may come on down to the roadmap line in the back test, similar to Microsoft. This one just been hanging out at the 1272, has not spiked up to the 1618 yet like Microsoft did. So we'll see what happens. But really, this is holding up pretty well. And might just consolidate, keep consolidating here and then lift off. So upside potential 212. But if we're going to go downside, 165 support. That's a pretty wide range for something that brings $25 billion of money into and out of the market for every dollar it moves. Big, wide $50 range there. Represents, think about that for a minute. Think about what that represents. $50 billion. Pull the calculator over, clear it up. I mean, 50 points times $24.4 billion per dollar. It's $1.2 trillion represented in that range right there. $1.2 trillion. That's crazy to think about, right? That range right there. $1.2 trillion of market cap. We're kind of sitting near the bottom. So we'd add $1.2 trillion to NVIDIA by moving up to there. $1.2 trillion. You're like, wait, how do you know? Like, that doesn't make any sense. I thought share price is share price, right? Well, gets into this bigger conversation. So you have to take the number of shares, right? The number of shares out there, basically $24 billion of shares. I mean, 24 billion shares. So that if it moves $1, they move $1, that's $24.4 billion. Every share, $1, $24.4 billion. Multiply the current price by the number of shares. Multiply those two together. You get the market cap. So we move up $50 times 24 billion. That's $1.2 trillion added on to that number right there. That makes that basically 5.4 trillion. Pretty close in round numbers. Crazy numbers. Crazy numbers. See right here, like NVIDIA kind of running away from the pack. Everybody else kind of hanging around. Like we got Microsoft and Apple hanging around the $3 trillion club. We got Alphabet, Amazon, Silver, Bitcoin, almost Facebook hanging around the $2 trillion club. And gold up here in the $24 trillion club by itself. Wild. Tesla. Coming back to back test again. Back tested once, back testing twice. Let's get the heck out of here. This might be a failure, and we might actually break down and come back down to the 270 area now. We'll have to see. But this might be the last this might be the last retrace before we pop. It's quite possible. We're holding that uptrend of higher lows. Say it in the right order. Holding that uptrend of higher lows. Netflix still consolidating in here, working on either a pop up here to the resistance or a drop down here to support. I don't know which one, but eventually, if this does the typical pattern, we're going to see this move down here to about 1100, maybe even 1000. So, a couple hundred points down. All right, stuff moving today. We had an absolute massive list of decliners on this tariff crap. We're down 50 points. Taking it back up just a little bit. There's my new credit spread thing firing off. Potential bounce. That was an entry. Looks like we maybe get some bouncy boom action here in the market. If that'd be nice. That'd be nice. Take it back higher. This could have wrapped it up, like I said. Spiked it down. Oh, perfect place to bounce. Look. So this one, if that's the first move down, absolutely. That's the retrace, the beautiful. Here was the ideal target, and that's where we bottomed right there. For the correct, absolutely beautiful correction. Bounce here. Break back above this consolidation at 64.60. Probably going to new all-time highs yet again. Those new all-time high targets. Still in the same place, 65.62. So that freak out may be done. We're going higher. Now there's tons of decliners, tons of stuff. Some stuff bouncing already. ASML getting wrecked here. This is one to keep an eye on. Potentially have the A move up, the B retrace to an ideal spot. And if this is going to be the C up right here, first move up, retrace, hold that 618, break back higher. That next move could be pretty vicious. Pretty vicious indeed. Maybe like, what do you mean vicious? Watch this. That low, that high, that retrace. The next move could be up to 873 right here. It could do that very quickly. Right there. Am I saying that's an opportunity to buy? Depends. Depends on your risk. Right there. If we hold that 700 zone, that's where I would expect it to go next. And then pull back and then make that final move right up in here. Right like that. GE Veranova, probably coming back to the roadmap line finally. This has been absolutely crazy. Absolutely crazy. Finally run out of steam here at the 1618. Nice, bigger retrace, be normal. And then we can resume the uptrend. Resume the position. All right. There's a lot of stuff on here. Ulta bouncing. Look at that. Hunting for anything that might be interesting. MDB, just kind of sitting. Coinbase, I want to see that dip to the roadmap line, which is just a little bit lower. AMD, I kind of want to see that dip on down. Give an opportunity. That was one big rip off the lows. We kind of hit our head at the prior high back here in July of last summer. Not July this summer, July last summer. Hit our head right there a year, almost a year later. Pulling back. Love to see it visit this 100 to 130 zone. Find support there, and then we bounce and go higher. I'd love it. I'd love it ideally down to this 108 to 120 zone right here. That would be the best opportunity for a big next move higher. Snow tagging targets there on Thursday and Friday and pulling back a little bit normal. If we hold that breakout, this was a breakout, we're retesting it. We hold it, push on up into the target zone, maybe up around 280. Oracle, yeah, coming back to retest the breakout, maybe visit the roadmap line. Let's see. Only 3 things were set up with my signature pattern today on Friday for an entry. Robinhood needs to revisit the roadmap line. Wow, lots of stuff been elevated and just getting flushed out this morning. Wow. What a list. Almost all the high flyers pulling back. All right. MLPX. Wow. What a nasty looking chart. Honestly. I don't know if I get involved in this, but global energy infrastructure. There's the bounce. The target's 62.99 right there. In. There's the bounce, 44.75. And that was probably on the list before the other day. And SJM Smuckers got flushed out on earnings, coming back up pretty violently. And 117.10 targets. That's the 3 with the target right there. Alrighty, everybody. Bias for the day. Well, I'm looking for a bounce optimistically, but watching those levels I talked about. Just a review. And if anything I said was helpful, beneficial, give me a like. We're looking for this to hold these lows so far on ES. Watching for the resistance up here at 64.60. And then the confirmation we're going higher, back above 6,500. Right there on the futures. For the cash index, we need to be back above that 64.65 area. Got a large gap to fill to get there. If we start back below, we may dip down lower. And that downside target's down around 6,300 right there. So have a great day. I'll be on Profit Panel at 11, about 50 minutes from now. ProsperityPub.com/Profit Panel. And